Hello, Internet. I'm Adam Seifert with the Accounting Guys, and today I'm going to take you through a month-end close process in Lightspeed DMS. All right, let's jump into the month-end close process. So I think it will be helpful to start outside of Lightspeed to give a little bit of an overview of the process here. And before I dive into our steps, I'm going to give a little bit of the reasoning why we take the approach that we take. And when we talk about a month-end close, a lot of what we're talking about is locking down our net income. So in this example, we're talking about the month of October. And if we look at our fake P&L here, we have a net income of a little over $100,000. And a lot of the questions that I field, are around how do I know that my net income is correct? I feel like I have a hard time knowing for sure that this is the correct number. And so that's a lot of why we are doing a month-end close, and the month-end close process is identical to a year-end close process other than tax entries that are taking place. So if we can get into a rhythm of getting a solid month-end close, that's how we're going to get a solid net income number that is not going to shift on us. And so a common thing, that I will hear is every time I run my P&L, that number is shifting on me, and I feel like I have a hard time pinning that down. So month-end close process will help us to solidify, in this example, is my net income my final number when I'm talking about the month of October in this case. So our steps, we've got 5 high-level steps. Our system checks, our bank reconciliations being complete, and then a review of our balance sheet. And we split that into 2 sections, scheduled and unscheduled accounts, and then we close the period. Before I do system checks, I want to get through our scheduled account because it'll make a little more sense there. So we're going to skip step 1 for now. We'll come back to it. Bank reconciliations being complete. All right, so when we're in Lightspeed, to double check our bank reconciliations, I go to General Ledger, Bank Reconciliation, and I can check all of my financial accounts. So want to make sure all of our checking, savings, credit cards, those accounts are represented here. And then as I go through them, I can see my statement date and approved date. So this is a test environment. So this is the only one. Yeah, that's the only one with an approved reconciliation. So the last time this account was, quote unquote, reconciled was March. I would be concerned with this if we're in October and we haven't been reconciled since then. I would never trust financial statements if my bank reconciliations are not complete through that period. So in Lightspeed, this is how we check to make sure that all of our accounts are reconciled through the period that we're talking about. All right, so once step 2 is complete, then I can move on to my scheduled account review. So coming back to our P&L question, how do I know that my net income is complete? I'm going to show you a little trick here. This is a simplified balance sheet, but a lot of our main accounts in a dealership are represented here. Our retained earnings line is our P&L. So the P&L will have a lot of detail and a lot more than this here. You might have 50, 100, different P&L accounts when you break them all, detailed out. But it gives you one number at the end that is your net income. That is what is represented by your retained earnings number. This doesn't typically populate until the end of the year. That's an automatic entry that Lightspeed will make. But this is essentially happening on a month-by-month basis. So for me to solidify this number, instead of digging through, hundreds, thousands, tens of thousands of transactions that might be accumulating and creating your P&L, if I make sure that my ending balance on each of my balance sheets accounts is correct, then I know that my P&L is correct. So it's a little bit different than or counterintuitive maybe, that in order to solidify and know that my net income is correct, the way to do it is actually make sure that my ending balance sheet is correct. So in here, I have labeled our account types here, unscheduled and scheduled. And then we have, so all of our green accounts are our scheduled accounts. Our kind of salmon color are unscheduled. And then our orange ones and the blue one here, these are the accounts that are a little bit of a mix. So cash accounts are unscheduled, but we can get comfortable with them through our bank reconciliations. Our scheduled accounts, the ones in green here, examples are accounts receivable. And all a scheduled account is an account with, we've got accounts receivable of 40,600 here. A scheduled account means that there is underlying detail, that if I dig into that, I have, in this case, 5 different customers with 5 different balances that add up to the total of our 40,600. So this number on the balance sheet is supported by a schedule, and we've included a little definition here. An accounting schedule is a supporting document that provides additional detail or proof for the information stated in the primary document. So our schedules are the proof that AR on the balance sheet is correct. So when I'm looking at this number, I can look at the schedule, I can see my proof, all of the underlying detail for it. And the same thing is true for example, if I go into new major unit inventory scheduled here, here's an example of what that schedule would look like. I've got all of these individual units with cost on them individually, and they add up to the total of just over $1 million here. So that's the proof for why this balance on the balance sheet is correct. We'll skip down into accounts payable, 82,650. If I go into AP, here's all my vendors with the amount owed to them that is rolling up into that detail on the balance sheet. So scheduled accounts will always have an underlying schedule that proves out the number sitting on the balance sheet. And so when we go back to our steps here, when we're reviewing our scheduled accounts, what we are doing is we are running the underlying schedules and reviewing them. We're saying, hey, do these 5 customers really owe me these balances? And if you were to come in and review this and say, hey, Mary, I know Mary does not, Mary has paid off her AR. This is not real. We would need to make an adjustment to the balance sheet. And if I were to decrease my accounts receivable, typically the offset is going to be a write-off to our P&L. And so you can see as we're doing our review and we're making adjustments to our ending balance sheet, that's how we're solidifying that our P&L is correct. If we have P&L items, if Mary doesn't really owe us 5,000 and I need to write that off, we either didn't categorize it or we decide that she's not going to pay us, then that means that this shouldn't be on the balance sheet and it's going to need to be run through my P&L. That's going to affect my net income number there. So back to our schedule. So that's how we review our scheduled accounts. There are reports in Lightspeed for every single scheduled account where we can get the detail and review each of those items and make sure that there's nothing in there that should not be there. So now that we've covered our scheduled accounts, I'm gonna come back to our system checks. Some of our system checks are making sure that our scheduled accounts actually agree with our balance sheet. So an example of that would be from time to time this will happen where if I look at flooring payable of $1,004,553 here, if I were to run my schedule, this would not agree. This might say 1.1 million, and so that means there's a break between my underlying schedule, my underlying evidence or detail. There's a break between that and my balance sheet, and those are things that we are checking here in our system checks to make sure there are no breaks. And so I'm gonna do 3 quick examples of system checks that we do. One is making sure our trial balance is in balance. So the way that we do that is we run our trial balance here, and I just run it for this month, generate the report, and then I jump to the end, and right now we have an error. We are out of balance, $30,000. This video it's beyond the scope of this video to correct those errors, but this means that when I'm running my balance sheet and or my P&L, that my data, there's a break in the data, and then I need to go investigate and resolve this. So that's number one. That's checking our trial balance. Schedule errors. Again, the example of where my underlying schedule of flooring payable, for example, does not agree with my balance sheet. There's a break internally in the system. Lightspeed has three of the most common just built in there for you. AR subsidiary reconciliation, AP, MU subsidiary reconciliation. This is making sure that, for example, there is not a break. So if I run this, there is a $15 difference between my my detail, this MU total. This is my detail, and this is my balance sheet, the GL. There is a break in the system right now. So that would be something that we would want to investigate and resolve. Again, that's beyond the scope of this video, so I'm not going to go into that here. All right, and then the third system check that we're going to talk about are management activity errors here. Those will be shown, that's this little green light down here. If you see a red light, then that means there's a management activity error. And essentially what that means is somebody ran a front-end process. An example of that would be they hit finalize on a sales deal, but perhaps the underlying mapping that is going on is not completely mapped, and so it is not going to post any of that accounting detail. So an example would be, let's say we don't have a sales tax category mapped for that sales deal, and the sales tax might be $100. It's not going to only not post that $100. It's not going to post any of that sales deal. So if you see a red light in here, then you would go into your management activities, uncheck your successful documents so you only see your erroneous, to find out which sales deals or maybe ROs or parts invoices have not posted due to a mapping error, typically. And then you could go in and resolve the underlying mapping so that the rest of those accounting entries will post. All right, so we're going to jump back. So system checks is actually what we would do first. But I wanted to make sure we had covered scheduled accounts before we did that. Bank reconciliations are complete. We have done our scheduled account review. So again, we've gone through each of our scheduled accounts, and we have reviewed the underlying detail. We've reviewed our customers' balances, our major unit inventory, our flooring, our AP. We're reviewing these to make sure that those are reasonable. At this point, I'm going to touch on three that are just a little bit different. I've got these as scheduled here. I'll do fixed assets first. This is not technically a scheduled account in Lightspeed, but there should be a schedule outside of Lightspeed. And that's typically a part of your tax return. And so an example of a fixed asset might be a work truck, a service truck, or maybe it's a forklift, something like that. And so if you were to purchase a new work truck during the year, you would want to update that in Lightspeed, and then also make sure that information gets sent to your tax preparer to make sure that also gets onto the fixed asset schedule that is held outside of Lightspeed. And then parts inventory and work in process labor or sublet. The schedule is in Lightspeed, but in some cases, Lightspeed does not try to force it to stay tied. There is good reasoning for that. We're not going to go into that detail here as well. That's beyond the scope of this video, but we will create a video about our parts inventory section. So again, there is a schedule, but it often breaks and requires adjustments in order for those to stay tied, for your schedule to tie to your balance sheet. All right, so that covers our scheduled account review. Then our unscheduled account review. So examples of our unscheduled accounts would be our clearing accounts, accrued liabilities, long-term liabilities, a lot of our equity contributions, draws. Probably the most common one to be incorrect in a monthly review is clearing accounts. Those should typically be zeroing at the end of each day or week, or hopefully at least by the end of each month. And so if I jump over into Lightspeed, the way that you can review these accounts, I'm using some of our shortcuts here. If you can search most of them if you're not finding them here, but if I wanted to get to my chart of accounts, I could come into General Ledger, chart of accounts here. And if I were to start looking into my clearing accounts, I've got a balance that should probably have zeroed out. And so I can investigate that by drilling into it by just clicking into that account, a double click. Then I can click into my history and I can look into the items that are coming in here. So oftentimes we're clearing these out one by one. You know, our clearing accounts are just a holding account for something that somebody didn't know how to categorize, or we don't want them trying to categorize it. And the accountant at the dealership will come in and then recategorize these with journal entries to be zeroing these accounts out and get them coded to the correct account within Lightspeed. Some information that will be helpful to know whether or not an account is scheduled or not is right here where it says schedule. If an account says none, it means it is an unscheduled account. I can just make journal entries to that account. If it has something in there, it means it is a scheduled account. So for example, contracts in transit is scheduled and it is part of the receivables schedule. This means I can't or I shouldn't typically be, I can't make regular journal entries to the account. I can't do that. And I generally shouldn't be trying to even make schedule adjusting journal entries to the account. In order to make adjustments to these accounts, I should be adjusting the actual client receivable through credit or debit memos. If it were, for example, AP, I'm generally not, I can't make journal entries to the account. I generally shouldn't be making schedule adjusting journal entries to the account. The way I make adjustments to it is I create invoices to the underlying customers to fix or vendors to fix the balances. The other thing I'll point out is by type here, H means it's a header. So those are accounts I wouldn't be reviewing at the end of the month. I'm reviewing the detail accounts, and then I'll know if it's scheduled or unscheduled based on the schedule column here. So I've got header accounts and total accounts that I'm not going to be drilling into the detail there. All right, so that covers our unscheduled account review. And then the last thing that we would do is to officially close the period. We can actually lock the period in Lightspeed so that nobody goes back and makes adjustments to a period that has been closed. And the way we do that is you go into System Preferences, Accounting, General Ledger, and then right here, Accounting Close Date. I can update this period here to say, hey, let's lock the period. And then I no longer can go in if I were to try to make a journal entry. Well, I had it there, 10/13/23. It won't let me make an entry here. So let's just show an example here. If I try to save that and then post it, it won't let me post that. So that's how you lock the period. So again, then in summary, the reason that we would consider and generally recommend closing going through a month-end close process is to have some form of finalization to our financials on a monthly basis. If we don't do that, then what tends to happen is we finish a month and then we realize that there are items on the balance sheet or missing from the P&L, and this number tends to shift on us over time, which makes it difficult to know how we did in the prior period, to be able to benchmark off that prior period for how we think we should be doing in the next period if we want to do any kind of goal setting. So that's the importance of why we would consider or recommend having a month-end close process. And then the way that we do it, again, run through to our system checks to make sure that there aren't any breaks in the system, make sure our bank reconciliations are complete, and then we review our balance sheet to make sure that there aren't any balances in there that shouldn't be there any longer. And then with the way we think about doing that is breaking it up into a review of scheduled and unscheduled accounts. All of our scheduled accounts have reports that can be run to see the underlying schedule, and then our unscheduled accounts, there's no schedule, there's no detail to run, so we have to actually drill into those accounts if we want to review the detail going on there, and then to close the period. All right. In conclusion, if this video felt overwhelming, that's okay. This is a pretty quick overview of something that, you know, a process that could take, you know, a lengthy amount of time, especially if it's the first time that you're doing it, or if your books are not necessarily super tight at the moment. It is a process that does get quicker over time. The cleaner your books are, and the more experience you gain with the month-end close process. On that note, I would say the two things that we do the most of on our dealership accounting side of the accounting guys is cleanups, where books may have gotten a little bit messy over time to get things into a good place, cleanups, and then assistance with or handling a month-end close process on a monthly basis, all the way from handling most of, if not all of these things on a monthly basis, all the way down to just consulting and training on these processes. So with that, I will conclude our overview of the month-end close process. Thanks for watching this video today. Our favorite videos to make are the ones recommended by our viewers. So if you have any recommendations or requests, feel free to leave a comment below. If you would like to discuss this video or work with us one-on-one for anything else, our contact information is also found below.